This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, May 25th, 2015. Euro dollar. So the euro is now broken back below previous neckline resistance in the 110.52 area, and this could put the pressure back on the downside for an eventual retest of those 12-year lows from back in March at 104.62. At this point, a lower top is now sought out by the recent high that we saw at 114.67, and really any rally should be very well capped ahead of 112 in favor of continued downside pressure. Only back above the 112 area would compromise the current bearish outlook. Sterling dollar. So cable has recently stalled out by 2015 highs at 158.15, and the market could be poised for a medium-term bearish resumption with a daily close below 154.45 to help confirm this outlook. A close below 154.45 will open the door for an acceleration back towards recent support at 150.89, and then potentially all the way back down to the lows that we saw this year, which come in at 145.65. At this point, any rally should be very well capped ahead of 156.50. Dollar yen. So dollar yen has been locked within a multi-week, multi-month consolidation, though this could be coming to an end very soon, with the market now poised and closing in on a retest of that critical 7-year high from earlier this year in March at 122.03. A break and close above 122.03 would open the door for the next major upside extension in this market towards the 125 to 130 area further up. Any setbacks in dollar yen should now be very well supported ahead of 118.23. Euro Swiss. So although we've seen some setbacks in recent trade in Euro Swiss, the market is still in the process of recovering out from 102.35, with the higher low sought out somewhere ahead of 103 in favor of the next major upside extension above 105.25 and back towards 108.15 further up. At this point, only a break back below 103 would compromise the outlook, while below 102.35 would negate. Aussie dollar. So Aussie put in a recent lower top, potentially at 81.63, with the market now poised for a fresh bearish resumption down towards those recent lows that we saw at 75.33, with a break below to open the next major downside extension towards the 70 area further down. At this point, any rally should be very well capped in the 80 area, while only back above 81.63 would compromise the bearish outlook. Dollar CAD. So dollar CAD has done a really nice job of being supported by recent lows in the 1920 area, with the market now potentially carving the next medium-term higher low in favor of a bullish resumption, eventually back above 128.35 and towards the 130.65 2009 peak further up. At this point, any setback should be very well supported in the 120 area, while only below 119.19 would compromise the bullish outlook. Kiwi dollar. So Kiwi dollar looks to be in the process of carving the next medium-term lower top at 77.44, with a break below the recent lows that we saw this year at 71.76 to confirm the lower top and open the door for the next major downside extension towards 65. At this point, any rallies in this market should be very well capped in the 75 area. SPX 500. So the S&P 500 recently put in a fresh record high at 2137, and these gains do suggest the potential for continued upside, potentially all the way towards the 2200 area. At this point, a break back below recent lows that we saw going back to the 12th of May, which come in at around 2084, would be required for to take the immediate pressure off the top side and open the door for more significant downside, while a break below 2040 would ultimately be required to suggest that the market is putting in a top and open the door for a serious correction in this equity market. Really, until then, the pressure remains on the top side for additional gains towards next key resistance in the form of psychological barriers at 2050. Gold. So although gold has recently pulled back from 1232, this market looks like it's in the process of carving what could be a more meaningful longer-term base off the 2014 low at 1131. Look for any setbacks to be very well supported ahead of recent lows at 1170, while a pushback above 1232 will strengthen this outlook and open the door for an acceleration back towards 1300 in the days ahead.